Hey, Jesse here. This is the 10% move. So, welcome back. All right, so please be advised that this is for entertainment and educational purposes only. I'm not a financial advisor, so I recommend you do your own research. Okay, so basically, I'm a regular guy here taking $3,000 and putting it in the stock market and doing an experiment to see how it goes. So I'm telling you exactly what I'm doing as a challenge, and for you to entertain yourself, basically. All right. So the way I do this, just I explain it every time, is I go through the Nasdaq 100, and then I scan it and pick three stocks that I think are going to make a move of at least 10% within this month, and then I give you the rationale of why I think these are the stocks that are going to make the move. Right. So this time, the three stocks that I have picked are Broadcom, Google, and Apple. I already talked about Broadcom, and today I'm going to talk about Apple, and then probably later in the week I may talk about Google. So let's focus a little bit on Apple. We're already in. So basically, I'm already in. So basically, today I'm giving you the reasons why I'm going to continue to ride this stock. And basically, we can say that Apple is in an upper, as we see in the chart there, Apple is in a riding. Is riding the upper half of the strong of a strong up sloping linear regression channel, as you can see, and is showing a well-defined momentum since mid-July. So the stack right here is just breaking above the prior short-term resistance near the $261, and that is confirming a continuation of a trend up. So it's confirming strength upward. So the overall setup for this run right now remains bullish. So I'm staying on this stock. Now the RSI that I use, the RSI 14, is at 66.75. So the RSI is just below the overbought line, which is 70. So this is suggesting momentum, that the momentum remains strong. But it may probably start cooling off a little bit. So it's something that we may probably want to take a look, or I will definitely take a look at. Keep an eye on. So as long as the RSI stays between 70, between 60 and 70, I think that the momentum is still bullish, and I will stay on the stack. Now, when it comes to the linear regression that I use as well, I see that the price is touching the upper boundary, and that is signaling strength, but it's also nearing the resistance point. So I will definitely watch that. And I see also that the midline there at $252 is acting as support. So then the lower channel at 232 to 235 is basically defining the risk boundary, and I will definitely be watching that. Now, this pattern is supporting my 10% potential upside that I'm looking for, and if the trend remains above $258 support, I will definitely continue to ride it. Now, I also use the 20, 50, and 100 EMA, those clusters, and I see that the price is at 262 overall. Right now, $262.77. Now, the 20 EMA is at 245, the 50 is at 243, and the 100 EMA is at $232. So all the EMAs right now are stacked positively, and they're fanning upward. So that is, for me, is confirming a sustained bullish structure right now. So the stack also is well above the 20 EMA, and that is, in my opinion, reinforcing strength. And though slightly extended in the short term, so I'll be definitely keeping an eye on that. Now, I also keep an eye on the volume. I take into account the volume. and I see that there is a spike on recent breakouts, and that is confirming the institutional participation on the stock, which is very, very important. Now, the follow through candles right here with the stable, I mean, have kind of a stable volume, and that is also a healthy sign for me. So it's not like a blow off top where things are overextended and then they just fall sharply, but it is like a sustained growth, and I really like that. So in terms of price zones, I'm already in, so I want to continue to ride this stock. But if I were to start today or to enter today, if I was not in the stock, I would definitely look for price levels between 257, I mean 58 and $261, and that would be like an ideal entry if I was not in the stock. And so if I wanted to stay, if I wanted to add to the position, I would add a little bit more around that price range. Now, when it comes to the target zone, if I was not inside the stock, if I went where to get started today, I would definitely look for 288 to $290, and that would basically match the top regression channel projection over the next 7 to 20 days, something like that. And I will do that if the momentum continues, of course. Now, I always set up the stop loss, and if I was not in the stock today, I will set it at $245, and that is basically below the 20 EMA. So it's just it is ideal place for me to set it, and also the mid channel break, so the mid channel, and that is if it breaks below the 20 EMA, then that would be something that indicates that I gotta get out if I was not in, right? So mind if I was in, which is the case. So the outlook for the 7 to 20 days right now, so I can see that the probability of hitting this 10% if we started today at $288 is around 65 to 70%. But since I started on the 17th, October the 17th, the probability is actually higher because I'm already up like 5%, as you can see. So I am at 75, 76% of probability of hitting these 10%, of which I already have this 5.16%. And talking about this chart right here, you see that Apple, I purchased it on October the 17th at $249.35. And the target price is 274. All right. So right now you can see it's 261 and some change, giving us or giving me a 5.16%. So we're going to continue to keep an eye on this to see if we can hit that 10%. It's very likely. All right, so that's basically it. That's basically it. All I have for Apple, and yeah. So thank you very much for watching. If you like the content, please hit the like button, and also subscribe. And don't forget to hit the notification bell button so that you don't miss any of the updates that we drop here for these stocks on our journey. All right. So as of right now, thank you once again for watching, and I'll catch you on the next one.